Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs of the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital, and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hello, everybody. Welcome again to another live episode of Wall Street Unspun, midweek market update. I'm Peter Schiff, host of the show for the next hour, president of Euro Pacific Capital, author of the book Crash Proof, How to Profit from the Coming Economic Collapse, soon to be re-released, Crash Proof 2.0, coming in September, and also the little book of bull moves in bear markets. The number to call toll-free, 888-678-9597. That's 888-678-9597. Anyway, I did a television show today, actually not really a TV show. It's a thing I do every Wednesday on Fox Strategy Room, which is an internet show. But I got to do the show with my brother. It's the first time both Peter and Andrew Schiff have been on television at the same time. Anyway, it was a good show. I just happened to notice if you want to check it out, there's some clips up of it of our appearance on YouTube. Also, I noticed a very interesting YouTube video that somebody put together. It's kind of like a commercial, or his idea of a commercial for my campaign, or my potential campaign for the Senate against Chris Dodd. And he did a really good job. I'm not sure who put it together. It's about 5 minutes and 25 seconds. A few people have copied it, so it's up on quite a few places on YouTube. In fact, on my YouTube channel, Schiff Report, which is the official Peter Schiff YouTube channel, I highlighted it as one of my favorite videos. But if you get a chance to look at it, it's I think it's an excellent compilation of clips with me and Chris Dodd, and he's put it together very nicely, and he's got a music track there. So it's a great PR thing for my run. So if anybody sees that, and if you want to forward it to other people to potentially support my potential candidacy for the U.S. Senate. The contributions are continuing to come in on Schiff for Senate. I think we're close to 2,500 contributions, so that's pretty good online. And also, I've been getting contributions in the mail, from clients, and so I appreciate everybody who is contributing. And hopefully, we will have a real announcement on this sometime soon. I definitely, there's a few people that are organizing a money bomb as well, and they're doing this Shiffathon, which is going to be a week dedicated to my potential candidacy, trying to do a telethon, a Jerry Lewis-style telethon. I noticed up on their website they've got over 6,000 pledges for $100 or more. So we'll see how they go, and hopefully we'll let that play out and see how successful their efforts are, and try to announce some kind of definitive answer shortly after that. And remember, I said if people do make a contribution and it turns out I don't run, my intention is to return those contributions. In any event, let me give out the number again, 888-678-9597. I think there's only one caller in. The lines are open, 888-678-9597. Well, we finally got a little bit of a correction, or a one-day correction, in the Chinese markets last night. Hang Seng was down, about 5% or so. It had been up, I think, I don't know how many days in a row, but it was 14 days consecutively or something like that. The Chinese market has more than doubled on the year. Hang Seng was up maybe 90%. Even the European markets were strong. Other markets were strong. And I remember talking about this last year when the markets got beat up pretty badly, that I thought 2009 was going to be a huge up year for the markets, particularly the foreign markets. And so far, I've been correct. I've never seen a year like this. I've never seen stocks move up so much in such a short period of time. I remember one of the stocks, when I talked about the Hong Kong market and I talked about how cheap stocks got, there was one stock in particular I was always talking about. Probably a lot of you listening might own it, but when I talked about stocks that were at 1 or 2 times earnings, there was one in particular I was thinking about that was trading at just over 1 times earnings. That stock is now at 12 times earnings, and their earnings have gone up. So the stock has appreciated tenfold from where it was in October last year. Now, of course, not all the stocks have done that well. In fact, I think that's the best performing stock of the ones that we've been buying. But it shows you how quickly markets can change and how quickly prices can change based on circumstances and based on liquidity. And I know a lot of people were jumping to erroneous conclusions based on short-term market movements in late 2008, and now we've had tremendous moves. Now, I've even read articles recently. People are now criticizing, that China's a bubble, it's moved up too fast, stocks have come up too fast, be careful, stay away. Obviously, the markets have gone up a lot, and there's always the potential of a pullback. No question about that. But there's also the potential that there won't be a big pullback. For me, I'd still rather be invested. I still think the risk is in cash, despite the fact that cash did well in 2008. As far as I'm concerned, it was the first year in the last 10 that cash has outperformed foreign stocks or foreign currencies or precious metals. I don't expect it to repeat. I also don't expect the good returns in U.S. Treasuries that we had in 2008 to be repeated. But already I think 2009 is one of the worst, if not the worst year in history for Treasury bonds, and I expect that trend to continue for years to come. And, when people look at the Asian markets, and not just China, I mean, there's a lot of the emerging markets. I think the whole emerging market index is up, 80% or so on the year. A lot of people who think that, the markets have gone up too fast, they're looking at it without putting it in a proper perspective of how much these markets went down in 2008. I mean, so we're rising from a ridiculously low level that we never should have traded at from a fundamental basis. So, we're coming back to a more realistic valuation. I mentioned on my video blog the other day that someone had sent me an article where they kind of compared the valuations of emerging markets to developed markets, and they said that right now, on a relative basis, the emerging markets were very expensive. And, we don't focus too much on emerging markets at Euro Pacific. We mainly do the developed markets. But the point here was that emerging markets were expensive because on a relative basis, they're trading at a level that's high based on historic norms. They're not trading at a premium to developed markets, based on multiples. But the difference between the multiples on the emerging markets and the multiples on the developed markets is about as low as it's been. And I think that's kind of a deceptive number because, number one, I think a lot of the earnings estimates from a lot of the emerging market economies are too low. And I think the estimates for the developed markets, particularly for the United States, are too high. So I don't think that dichotomy really exists to the extent that some people think. But in any event, I think it's still important to bear in mind the big picture, and that's inflation, money creation, and that if you look at look at what's going on, look at the economic data coming out around the world, we're seeing marked improvement. And the meeting just concluded in Washington, where we had some Chinese representatives here meeting with Americans, Geithner, Hillary Clinton, and our whole team of pitchmen, trying to reassure the Chinese that their investments in U.S. Treasuries are safe and that we're going to rein in the deficit. Of course, what does the world expect us to say? The truth? You're screwed? You're going to lose all your money? We're never going to rein in the deficit? That's the truth. They can't say that, so they lie. Does anybody think that Chinese believe? Does anybody believe that we're going to rein in the deficit? How can we possibly rein it in? Spending is growing out of control. We want to add more programs. We want to add socialized medicine. We want to do all this stuff and then claim that we're going to somehow magically bring the deficit under control. The deficit is out of control, and there's no attempt to control it. All we want to do is make sure that the Chinese and the Japanese and the Saudis and everybody else are dumb enough to finance it. And, of course, it's more problematic for us if they do finance it than if they don't. If they don't finance it, we have to swallow the tough medicine right now. If they do finance it, we have to swallow even tougher medicine in the future when they ultimately come to their senses. And, of course, the amazing thing, too, is, the agreement, what the economists or the politicians came out of the meeting saying that the Chinese have to consume more and Americans have to consume less. We have to save more. Well, duh, but that's not the policy. The stimulus is designed to prevent that from happening. Our stimulus is designed to get Americans spending, get credit flowing. We want Americans buying more cars. That's not what we want. That's not what we're telling the Chinese. We're telling the Chinese that we're going to get our people to save more. But the stimulus is designed to get them to spend more. And the easiest way for the Chinese to get their consumers to spend more is to let their currency go up and to let the U.S. dollar go down. The best way for their consumers to spend more is for the Chinese government to stop buying our treasuries. You see, if they keep buying our treasuries like we want them to do, then they have to keep undermining the value of their own currency, artificially suppressing the purchasing power of their own citizens. Their citizens can't consume more until the government allows them that purchasing power. But one thing that is happening, as the government is printing up all these RMB and flooding the Chinese economy with money, rather than seeing their currency gain in value, the Chinese citizens simply have more of their currency. And so they're going to use that to spend more. But now they're going to spend more in a rising price environment instead of a falling price environment. But ultimately, the free market is not going to be fooled. The Chinese will consume more, and it will happen at our expense. They're going to consume the products that they no longer ship to us. That has to happen. And, I mentioned, too, in that video blog, and there's an article that I read about this where you had this Stanford economist, and again, it proves that complete ignorance on economics is not limited to the Ivy League like Harvard and Yale, but the prestigious universities on the West Coast have economists who are just as foolish as the ones back here on the East Coast. But, of course, he said that the Chinese are caught. They have no choice. They have to keep buying our bonds because if they stop buying our bonds, their currency will rise and they won't be able to export as much to us. Precisely. They won't need to export as much to us because when their currency rises, their citizens will have enough money to buy their production themselves. So they won't have to export. And you know what? They'll be able to save the shipping charges and they'll be able to keep all those great products. And their citizens will get to use them. Oh my, why is that terrible for China? It's not. It's terrible for us because we're stuck with our worthless paper and no products to buy and nobody to finance our deficits. And it's amazing that these prestigious economists at some of our greatest universities are so completely and utterly clueless about what should be the most basic economic concepts out there. Anyway, apparently on this, also on the health care bill that I mentioned, for a while it looked like it was going to be dead. And, the reason I think it was going to die in the Senate was the good news was the bill was so incredibly bad. It was such a horrible piece of legislation that even the Democrats in the Senate were prepared to vote it down. That's how bad it was. Now, apparently, I've heard today that now there's some of the blue dog, or whatever the Democrats are, that are somewhat more moderate than the other Democrats, that maybe they've come out with some compromise to make the bill somewhat less bad, and so maybe some type of watered-down version is going to be passed. But anything that they do is going to make the situation worse. I'm not saying that there isn't a problem in health care. There certainly is. There is out-of-control costs, but it's precisely because of government involvement in the healthcare system and because the free market forces have been disrupted by regulations and taxes and subsidies and all sorts of things, just the way they did in the housing market and just the way they distorted that, and just the way they screwed up our education system. And so we need reforms, but we don't need the type of reforms that Obama is trying to cram down. And, speaking about Fannie and Freddie, our old friend Chris Dodd, who potentially would be my opponent if I were to run for the Senate and get the nomination in the state of Connecticut. Apparently today there was a revelation that the sweetheart mortgage deal that he got from his buddy Mazzillo over at Countrywide, that he actually got this sweetheart deal and he was aware that he was getting a sweetheart deal. Well, how could anybody have thought that he wasn't aware? I mean, the guy is the head of the Senate Banking Committee, right? He's not the head of the Agriculture Committee. I mean, the guy assumably knows something about what mortgage rates are. And if his mortgage is way below the market, and if he pays basically no points, and he gets a special deal where he can alter the terms at will with no penalty, I mean, he's got to know that's not the average deal, that's not the deal that his constituents are getting. When he's in a special program called, Friends of Anthony or Friends of Mazzillo, I mean, he's got to figure out that, it's some kind of friends discount that he's getting. I mean, it's amazing for him to try to believe that he had no idea that he was getting a special deal. I mean, how stupid do these politicians think we are? I guess that's a rhetorical question because, anyway, I got a full board of telephones now. So let me take the first caller, who is a potential constituent, Chris, in Greenwich, Connecticut. Go ahead, Chris.
Hey, Peter. How you doing?
Good. How are you?
Good, thanks. I had a question about the inflation versus deflation debate. I know you see a lot of inflation in the future, but I'm wondering, hasn't there been more credit destruction, destroyed in the marketplace than the Fed is printing money, or are they printing more, money than there's been credit destruction?
Well, there's been a lot of destruction, no question about it. But there's also been a lot of new money created. And what you have to realize is that when, loans go bad, there are consequences because money was loaned out and nothing was, money was created. And, when a credit is extended, money is created. But the idea is that new money is supposed to lead to new production. New goods are supposed to be produced so that there isn't an inflationary effect. But when you create this new money and you don't create any new production, then that new money has no purchasing power because there was nothing created. So as these loans go bad, purchasing power really is destroyed. And so prices are going to have to go up anyway. It's not just that you have to say, well, more credit is being destroyed than money is being printed. The fact is money has been created, but no production has been created. Even if you destroy more credit than the new money that you print, the bottom line is there's no purchasing power associated with any of the money because loans have gone bad. I mean, if it was true that the Federal Reserve can simply print money every time a loan defaults and there would be no inflationary effects, then, we can have unlimited credit. I mean, banks could lend money to anybody for any project, no matter how harebrained. And if it doesn't work out, they would just go to the Federal Reserve. They would print up some money, no harm, no foul. It doesn't work that way. There are consequences when loans go bad. And we just can't try to print our way out of it. So prices are going to rise. And the only reason they're not rising now is because China and Japan and the rest of the world, they're still buying up the dollars that we're creating. They're still keeping the money off the market. They're warehousing it in our treasuries. That is going to stop. Meanwhile, a lot of the deleveraging, that's coming to an end. And if you look at what's going on around the world economies are growing again. Look at the numbers coming out of Asia. Look at all the increases. Look at the car sales going through the roof. Look at what's happening to the price of things like copper. Prices are moving up. Consumption in Asia and in China is starting to rise, and that's going to happen. And more of their production is going to be consumed domestically. Their economies are going to continue to grow, and ultimately, that flight money, that flight to the perception of safety, that's going to end. And the irony, and this is what's ironic, is that initially we benefited from this crisis because the reaction was, oh no, the global economy is a mess. Let's buy dollars. Let's buy treasuries. And we got this huge influx of money propping up our financial markets, keeping a lid on prices, keeping interest rates down. But as that condition of panic subsides and the world wants their money back, they're yanking the rug out from under our economy.
Right. So I also have another question. If you, let's say you did, which of course I hope you are elected into the Senate, and these banks have big problems again, AIG and all the other banks have huge problems again, and you were able to convince the politicians to not bail them out again, and they failed, and the economy went into a huge depression, or even if you go back to last fall and be in the Senate and let them all fail. I mean, obviously from a practical standpoint, it'd be better to let them all fail, but how would you deal with the situation going on? And wouldn't there be a sort of a moral conflict?
Well, there is no solution that's not going to involve some short-term pain.
Right.
But I want to get out of the habit of trading short-term gain for long-term pain, or short-term pain for long-term pain. I want to take the lumps. I want to take the medicine and get it over with. And you know what? We would have been much better off had we let these investment banks fail. Because, yes, we temporarily mitigated the severity of the recession. But in the process, we've guaranteed a much worse disaster a year or two from now. And in the meantime, we've made the guys at Morgan Stanley and at Goldman Sachs even richer. We've rewarded them instead of letting Goldman Sachs go bankrupt, which probably would have happened had the government not spread all this bailout money around and the Fed had not come to the rescue and bought up all this debt. Instead of letting them go bankrupt, we've made them even richer. You know, some of the people who drank the Fed's Kool-Aid and who got rich, on all these risky bets, who should have went broke, now they're even richer than they were before. And the result is the average American is going to be that much poorer in the final end results.
Right. I mean, yeah, you bring up a lot of good points. I mean, I've been listening to your show and following you. I've been watching a lot of your YouTube videos, and it just, it all makes sense, And I think that a lot of talking heads on CNBC don't have a clue.
No, I mean, they're mainly they're there as an avenue for advertisers, for the financial, the markets and yeah, I mean, they're journalists. I mean, these guys are journalists. I think they're good guys. I mean, they're well intentioned, but they don't know anything. I mean, they're journalists and they're entertainers, and they don't really understand the markets, and they certainly don't understand economics. I mean, that's for sure. But again, look here. I mean, I'm talking about this economic professor at Stanford. Doesn't understand economics. You got a guy, Paul Krugman. He's got a Nobel Prize in economics. He doesn't understand it. So if that guy doesn't understand it, how do we expect the people on CNBC to understand it? I mean, I think
a lot of them have the economics mindset, which makes absolutely no sense to me. I mean, it's all bogus, I think.
I know. Hopefully I live long enough to see the last Keynes textbook burned.
Yeah.
I mean, they belong maybe in a museum. Maybe like a Ripley's Believe It or Not of stupidity. But we don't want them in our universities or in our high schools or in our, we don't want them polluting the minds of young people.
Right. Thank you very much, Peter.
All right, Chris, thanks for the call, and I look forward to your potential support if I do run in Connecticut and your vote. Anyway, up next is Tony in Iowa. How you doing, Tony?
Good. How are you, Peter?
I'm good.
Hey, I'm actually in college right now. I go to University of Northern Iowa, and I think the Keynesian ideas are flooding our minds. I mean, they're teaching them pretty hardcore where I'm from. So it's really weird, but I know I'm following you a lot because you always like to do with long-term investments and stuff like that. And that's why you appeal to my generation, which is kind of a downfall because we don't have the money, so we can't support you. But my question is just what kind of investment track should I take, because I'm going to go into debt just to get my education, and in a couple of years.
It's a shame that you have to go into debt to get your education. If the government was out of the education system, colleges' tuitions would be so much lower that you would be able to graduate without accumulating all this debt. Now, fortunately for you, you could accumulate the debt in dollars, and it'll probably get wiped out. So you won't end up having to pay for your education. You're going to end up getting it for practically nothing as far as I'm concerned. But if I was you, I would try to major in something real. Look at engineering, look at computer science, look at real things. Don't just waste your time getting a liberal arts degree, because that's not going to be. If you want to study languages, study Mandarin. Try to make yourself a valuable person with skills that can translate internationally. In case I don't get elected to the Senate and I can't save the country, there's a chance that you might end up leaving the country, looking for better opportunities. So make sure you have the type of skills and education that will translate well internationally. Don't just study, some of the liberal art courses and basically have nothing to show for your degree other than 4 years of drinking beer.
Yeah, well, I'm double majoring in accounting and economics, so I don't know. I think economics is like really important right now. And
I would try to do. I don't know. I mean, there's a lot of guys with that. I mean, that's what I studied. I studied, finance, business, and accounting. But, I think you want to learn, other things. Maybe if it's international business or something there, or the minor in a language, or don't try to simply, because we're going to be losing jobs in the United States. I mean, certainly in financial services, it's going to be an industry in decline. But if you can speak Chinese, maybe then you'll have something going. So that's what I would try. That's what I would try to do.
Yeah, my roommate and I were thinking about going to China next summer through our college, so just to learn what they're all doing. But anyways, I was gonna tell you that I hope you do well in the Senate, because a lot of my friends, I debate with them about what's going on right now. So, and a lot of people like to tell me you should run for president. Well, that's a little ridiculous. I'm only 20 years old.
Yeah, I mean, who? You mean you should run?
Yeah. I'm just like, maybe you.
Well, you got to be 35, so
Yeah, I know that. They're just like.
Well, the thing for me is, it'll be a little presumptuous to try to run for president. So I think Senate is already a big enough position, considering I've never even been elected dog catcher.
Oh yeah.
So there are a lot of people that that go into politics and they start off on the local, state level and they work their way up. But the thing with difference between, see, I'm not a career politician. If I decide to run for the Senate, and if I am elected and serve in the Senate, I'm not changing my career. I'm disrupting my career temporarily to try to go to Washington and help prevent a real economic catastrophe, to try to educate the other representatives, the other senators, so that they understand economics, understand their role in creating the problem, why they're making it worse, and what they need to do, and maybe to influence the 2012 elections. And hopefully I can go there and make a difference, and then go back to my civilian life, go back to my day job, and let someone else have that Senate seat. But I don't really want to be there. But I realize that the people who are there are doing a terrible job. And if some non-politicians don't clean up the mess that the politicians made, we're all going to suffer.
Yeah. So, well, good luck, and I'll probably just keep on following you. So.
Thanks, and good luck. We need more young people like you. That was Tony in college in Iowa. Next up is another call from Connecticut up in Hartford, another potential constituent. Go ahead, you're on the air. It's Peter Schiff.
Hello, Peter.
Hello. Yes, what is your name? Is Shu?
Yeah, my name is Shu, a Chinese guy.
Oh, okay, yeah.
Yeah. I appreciate what you talking about the America financial crisis. I read your book, Cash Proof, and I listen to your radio show. And I have two quick questions. First, do you have plan to translate your book to Chinese or in the future?
It's already been translated. I mean, it's available in China in Mandarin. It was done over a year ago. In fact, I have several copies of the book in Chinese at my office. And it's got a totally separate cover. And it's sold extremely well in China, I hear. So I'm not really sure how much I made off it. I don't think the royalty deal is that lucrative for me, but I'm glad to know that there are a lot of people in China who have bought my book.
Oh, that's good to hear. I didn't know that.
Yeah, I have an analyst my metals and mining guy has made a couple of trips to China, and he always brings a number of the Chinese versions of my book with him because a lot of people want them when he gets out there. So I get some autographed copies. So, there's not that many autographed copies in China, but there's at least a dozen of them because I've signed them.
Okay. And my second question is about the near-term stock market. And a lot of people right now in China talking about the financial crisis. Some will say in the near future, because this financial crisis is not over yet, there's another second wave. And some will say because inflation worry, there's also a possibility of
what? I lost you.
Drop.
You there? Yeah, I couldn't hear. I lost you for a while, so I didn't hear the last part of your comment.
Oh, I mean, there's some people in China talking about the stock market big drop in the near future, like a 1 year or 1.5 year term, and
well, I mean, anything can happen in the stock market in the short run. I mean, I don't, really even attempt to time the market. I mean, obviously last year, the markets got killed. I mean, it was a big drop, and it obviously can happen again. I mean, anything is possible, but I'm always looking at a longer-term perspective, and I think in the long run, stocks are a better asset to own than bonds and than cash. And people like Warren Buffett, who's been an investor for a long time, is coming to the same conclusion. I mean, I just happen to think that based on the rather severe and unique problems that I see in the United States, that I simply want to adopt that Buffett strategy, but I want to do it internationally. I want to avoid the U.S. stocks because I believe the problems here are much more severe than potentially Warren Buffett understands. But I know that I don't want to be in cash and I don't want to be in bonds. And so, I don't want to be in residential real estate. I still think that's way over. So, I mean, I think stocks are the asset class to own, especially if you can find stocks that pay very good dividends, because now you kill two birds with one stone. You get income and you get potential for capital gains, because a lot of people who want income, there's no income available in the bond market right now unless you go and buy riskier junk bonds. But if you want high-quality bonds, you're not getting great interest, and certainly if you want CDs or money markets, you're getting hardly anything. So, if you can get good yields in stocks that are abroad and that are in foreign currencies, you got to be willing, as we learned painfully in 2008. Of course, you can't buy these stocks unless you're willing to see the value drop, because in the short run, look, the stock can go down. In the short run, the dollar could go up. The dollar's had a big drop, from where it was. It's still not all the way back down to the lows of 2008. But who knows? The dollar could rise. The dollar could jump 5%. Foreign stocks could drop 10% easily. So there's obviously short-term downside risk. But I've already made a decision personally. I don't care about the short-term downside. I'm going to ride that out. The markets come down, I'm buying more. I earn money. I'm not retired. I have an income, and I don't spend everything I earn. I spend a small fraction of what I earn. So I'm always looking to invest. I want to buy low. The lower, the better. And I understand, how this game is going to be played. I'm pretty sure I know, what how it's going to end up, and I'm investing for that. I'm investing to win the game, not necessarily, be ahead at every turn.
Do you believe the financial crisis is over because there's still large debt in the a problem in
I don't believe
real asset market, consumer debt, real commercial real
No,
asset?
I don't believe it's over at all. But what I do believe is, based on what the government has established as a precedent, that parts of the financial crisis are over, in that we won't have these systemic failures. We won't have the problems associated with bankruptcies, because the government is bailing out and stimulating. And so rather than taking our medicine in that form, we're just going to end up having to swallow an even more bitter-tasting medicine in the form of massive inflation. So we're just trading one type of crisis for another, but rather than getting a solution and building a solid economy that can grow, we're simply making the problems worse in the name of political expediency.
Okay.
All right, well, thanks a lot for your call, and
Thank you.
Maybe I can look forward to your vote if I run. Next up is Tony. Next up is Tony in Chicago, Illinois. Go ahead, Tony.
Hi, Peter. Thanks for taking my call.
Thanks for
There's
calling.
a good article actually last week in The Economist. The title was "What Went Wrong with Economics," and it brought up guys like Bernanke, Larry Summers, Mervyn King in Britain, and just saying how it's adding more skepticism to economics in general. And nowadays there's more jokes about economists being compared to meteorologists because neither one of them can forecast what's coming up next week. So what are your thoughts on the view of economics and economists in general?
Yeah, I also happened to see that there was a group of economists in the UK that wrote like a letter of apology to the Queen, apologizing for having gotten it so wrong. And and the idea is that that all the economists got it wrong. They didn't all get it wrong. All the Keynesian economists got it wrong, which they could never get it right. I mean, the guys that actually understand economics, guys like me and of course other guys, I'm not the only one, we didn't get it wrong. We got it completely right. In fact, I favorited another video on my YouTube channel. Somebody did another compilation video of Ben Bernanke, about 5 or 6 different TV appearances, where he was completely 100% wrong on everything he said. And, while as he was being wrong, I was and other people were being right. And it's not that economics failed. These guys don't know economics. It's like, you get a bunch of witch doctors and you put them in a room and they fail to diagnose a disease, and you say, well, medicine doesn't work. Well, sure it does if you go to a real doctor, but if you go to a witch doctor who's just got some potions and some juju beads and he bangs a stick in the air and he does a little dance, and you expect him to diagnose the proper cure or whatever, that's the problem. The problem is these economists don't know anything about economics because they're phony. And it's not the economics.
Maybe you should hire them to be your brokers. Bernanke probably sell a nice pop to an Eskimo, but looking.
I don't know. I wouldn't hire him though. I don't want a broker. I want somebody that understands economics a little better so they can talk intelligently to my clients.
I mean, how are you going to further the Austrian school of thought, though? I mean, how is that going to pick up in popularity, do you think?
Well, it is. I mean, there are a lot of young people who are reading Mises and Hayek and Rothbard, and they're reading me. I mean, in fact, the more the mainstream gets it wrong, the more people are attracted. And I think the Internet is a fantastic tool. People are, kids are learning on their own. It's not simply that they only see what their teachers put in front of them. They're able to look at the truth. And I think one of the reasons that I am so popular among young people, and I get emails from people in high school and all around the world, not just in America, and they're finding me because they're doing their own homework. They're searching certain terms, and they're finding my articles. They're seeing clips of me on YouTube, and they say, wait a minute, this guy was right. He got it right. Why did he get it right? What is he saying? What is he reading? And they figure there's a reason. I mean, I didn't get it right because I'm super smart. I don't have a genius IQ. I just got it right because I understood economics. Now, why did I understand it? Because I had good teachers. I read the right people. And so other people are saying, well, I'm going to look at what the guy that got it right. It's like, in anything else, somebody sees an athlete that is winning the gold. Well, what is he doing? Let me adopt his training method. Let me eat the same foods that he's eating. You want to emulate the guys that are doing it right, not the guys that are doing it wrong. So I think the best emissary for Austrian economics is people like me making the right calls based on that, and then when other people see it, then they learn about it on their own.
I agree. And Peter, you're doing a tremendous job, and I'm kicking you out 5% of my base pay monthly to your race. So let's get you in that office.
5% of your pay?
Oh yeah.
Oh my gosh, that's fantastic.
Yeah.
I'll try not to let you.
And anything we can do, even though I'm not, I can't vote, but I might try to figure out a way to do that. You got a lot of people in your corner, whether they're in Connecticut
if you can't vote, we don't want any voter fraud. I don't want to try to taint this thing. I'm not running in Chicago. I'm running here in Connecticut.
Well, set up an office here, and I'll be your sales manager.
All right. Thanks a lot. I appreciate it.
All right, Peter. Take care.
Okay, I think up next is going to be Jake in Sioux City, Iowa.
Hi, Peter.
Jake, are you there? Hey, how are
I'm
you?
here. Good.
Go ahead, you're on the air.
I got a couple questions for you. Number one, you're a business guy like me, and we always try to plan for our tax load. Okay, and we kind of look at our numbers along the line and what we can invest in to kind of minimize our tax load. Well, the problem we're having right now in this current economy is my accountant's telling me that we have no projections for next year. We don't even know what the brackets are going to be. And I'm in business, and I'm trying to make money, but I'm not going to go give half of my paycheck to the freaking Uncle Sam. So do you have any ideas on
look,
when we can expect some foresight?
There's a lot of uncertainty. No, because there's a lot of uncertainty. No one knows how high taxes are going to go. I don't think
Peter, but what I'm trying to say is that's what's holding the economy back. I mean, all the guys that are willing to invest and create jobs, we don't know what to do. Our hands are tied.
That's just part of the problem. I mean, one of the biggest problems is the government is borrowing so much money, they're crowding out everybody else. Even if you have a good idea and you want to expand your business, the capital isn't there because the government's borrowing it all. And yes, high taxes do discourage business activity. They discourage investment. The higher the tax, the more it discourages it. And, of course, a lot of people don't know how high their taxes are going to go. We know they're going to go up. We're just not sure by how much. So it does kind of have a chilling effect on incentives and on expansion as people take a wait-and-see attitude. And, yeah, I mean, the higher taxes go, the less you're going to work. I mean, there's an economic truism.
But we're 6 months into this year. I mean, for crying out loud, I mean, most businesses, Peter, and you're a business guy, I mean, we don't do just short-range planning. I mean, we're into it for a year, 2, 3, 4, 5 down the road.
I agree with you. And also a lot of people...
And they're just killing it.
Yes,
what do we do as a business guy? I mean, we're just
and it's not just that.
We're sitting on our hands.
Look, it's also the regulations. Look, I'm running a brokerage firm, and I can tell you right now, the regulations are killing me. They're absolutely killing me. I'm getting regulated to death. The FINRA guys, they're all over the place. And most of the regulations that they enforce now are not the regulations about trying to make sure that nobody screws their customers. The main regulations now are making sure that we do a good job as a brokerage firm of spying on our customers, that we report to the government everything our clients do, that we're good spies to try to catch the tax cheats and the money launderers. And the regulation is growing in that side. That's where it's really running out of control. And it's getting a lot harder to comply with all the rules and regulations that the government requires the financial industry to basically be the snoops, the watchdogs, to look out to make sure that everybody is paying their taxes and not trying to hide. I mean, it takes a lot of the fun out of the business, and apart from a lot of the profits out of it and driving up the cost. But I can see it in my industry, and I know, people in other industries where they've got regulators on their backs that are enforcing burdensome and cumbersome rules and regulations. It's just simply run up the cost of doing business, make it more difficult to stay in business, make it more difficult to generate a profit, make it more difficult to hire people. All this stuff is getting worse. And, of course, the less competitive we get, the more of our industry goes overseas, the more of our jobs go overseas, and these politicians in Washington still don't understand. I mean, most of them have never run a business. Barack Obama, he's never run a lemonade stand. The guy's never had a job, let alone run a business. So he has no idea, what this stuff is doing. He just takes advice from other economists who have never met a payroll or run a business, and they think they know more than everybody else because they think they're smarter than everybody else. And they think that they can micromanage the economy from Washington, D.C., and they're just going to run it into the ground.
My other question for you is I'm from Iowa, and Chuck Grassley is my senator, okay? And he's up for re-election next year. And we all know that he's one of the guys behind closed doors and secret deliberations, whatever, on this healthcare reform. If he really cared about this country, why would he even be doing that negotiation? And number two, what do we have to do in Iowa to get him out? He's one of those
I don't know.
guys.
I mean, you got look. I don't know. You got to put up a credible.
I mean, I know
the
guy, and I know you know the guy. He should move back to Iowa, and he should run. His name is Ivan. You know who he is. Ivan Endo.
Anyway,
Campaign for Liberty.
Oh, I met a lot of guys over there. But anyway, let me go. We're running out of time. I got a lot of calls on hold. Thanks for the call. Let me just say, let me take no more calls. I think there's 3 people on hold. I'll try to get to them in the last 15 minutes. Next up is Marco from Baltimore, Maryland.
Hello?
Hey, Marco, you're on the air.
Oh, great. Yeah, I just have sort of a general investment question. I'm calling from the States right now, and I'm actually currently living in Beijing. And recently I actually gained control of a college fund, which previously the money could only be used for education, but now I have complete control over it. And most of the value is currently held in stocks and mutual funds in the States. And while I'm sort of living overseas, I'm just a few weeks from leaving again. I kind of need sort of an investment strategy for what I should do with this money. I kind of want to, keep it liquid. I'm not really experienced as an investor. I sort of need kind of an idea.
If you want to keep it liquid for now and you're living in China, I would look at trying to move it into Chinese RMB rather than dollars. I think it's pretty much of a no-brainer for you.
I had considered it as much. I was planning on taking at least a portion and moving it into my Bank of China account.
Yeah, look, I think that's a smart thing to do. And to the extent that you have some of that money that is, you don't need to be immediately liquid, that you can, put it into some longer-term investments that are still liquid if you need to sell, but, that there's always volatility there. You should also look at investing in Chinese shares. Maybe you can open up an account there, or, you can certainly do that through my firm at Euro Pacific, or, just look, you have stocks already. Just take a more global approach. Invest in parts of the world that are going to grow, where they don't have the systemic problems that we have, and they don't have a government that's simply going to compound these problems, and try to, be where the money is going to be and the wealth's going to be created, not where it's being destroyed, unfortunately.
Do you have any recommendations as to how to kind of teach myself a lot of these things? Any sort of?
Oh no, I mean, have you read my book Crash Proof?
Yeah, just started actually.
Yeah, and get the little book of Bull Moves and Bear Markets. I mean, I outline a bit of a strategy there, and then you can do more research on your own.
Great. And how? Another quick question. I'm also I try and keep up with Jim Rogers and a lot of the guys on Lew Rockwell. He seems to recommend commodities, purchasing land. He seems to feel that there's going to be a shortage.
Yeah, Rogers is very bullish on commodities, particularly agriculture commodities. I share his bullishness. I mean, you could buy, we buy a lot of the ETFs for our clients that focus on the raw commodities. And I also buy a lot of companies in the agriculture space, in the mining space, in the oil and gas space. And so, long term, I think there's, a lot of money to be made in those sectors. And, you can either work with a representative at Euro Pacific Capital. You can give us a call, or you could try to find somebody out there locally to help you access those markets. Anyway, if you want to deal with us, call us up, 800-727-7922. 800-727-7922. I'm sure there are many brokers who are available to take your call. Anyway, thanks for the call today. Let me take another call from John in Destin, Florida.
Hello, Peter. I just wanted to say that my wife and I are big fans and appreciate your work. My question is in regards to possible gold price manipulation by the world central banks and large banks like Goldman Sachs and J.P. Morgan. You're probably familiar with GATA and their views in this regard to this alleged practice. What is your take in regards to their assertion that the world banks, including the Fed, manipulates the gold price by strategically feeding gold into the market to keep the price down?
Well, first of all, I just noticed I got an email from somebody who's saying that they think my internet broadcast is not working. I wonder if I can get any feedback on that from my tech guys helping with the show. I wonder why I got this email. Obviously, I'm getting plenty of calls. Are you hearing me? Are you hearing the show on the internet or?
I'm listening to you on the phone. Hold on just a second.
But I don't know. I just got another email note that said it's okay. Maybe it's that particular person's browser that's not working. Yeah, I've been here.
Looks like there's a delay on the website.
Well, there's always a delay. But, they're talking about gold price manipulation all the time for years. And look, I'm sure to a degree there's something that goes on that the central banks, they obviously want the price of gold to be down, and they do sell gold into the market. They do try to talk it down. And, as far as I'm concerned, let them do it because, the longer it stays cheap, the more gold I'm going to own, the more gold my clients are going to own. I mean, eventually the price is going to go through the roof. And so if foreign central banks are stupid enough to sell their gold, be smart enough to buy it from them. And right. I'm sure if U.S. or if European central banks are selling, there's plenty of Asian central banks who are buying. Just believe me, that's the way out of jail on all these dollars is just convert as many as they can into gold.
Right. I mean, it seems like, I don't know, the last couple of days in particular, the price of gold has gone down sharply. And I don't know if it's probably a little bit of a stretch to think there's some kind of relationship to the dollar tanking and gold.
Well, the dollar's strengthened. But remember, gold is still over $900 an ounce, right? The highest it's ever been is 1,000. So gold is within 10% of its record high. Look at the Dow. I mean, the Dow was at 14,000 last year. It's at 9,000. The Dow is, 30 is way below its record high. Hell, the Nasdaq hit 5,000 in 2000. I mean, it's nowhere near there.
Right.
So gold is holding up a lot better than other assets. I mean, oil got up to $140 a barrel. It's 65. I mean, so gold, even though it's not going up, it's really holding on to its gains, and it's biding time, I think. I think the next big move in the price of gold is up. And I want to buy all I can before that next move happens.
Yeah, absolutely. Well, I definitely appreciate you taking my call and keep up the good work. Really, really appreciate it.
Thank you for the call. Next up is another call from Chicago. It's Samir.
Hi, Peter.
Hey, how are
Can
you?
you hear me?
Yeah,
good.
loud and clear.
I'm good. I had a general economics question and a question about central banking. Let me just preface my question with something I heard you say, and that is that ultimately the goal of an economy should be to eliminate jobs. So my question is, as this transition of power occurs between America to Asian countries, how will America become competitive again? Will Americans have to work for 50 cents an hour or something like that, or will we have to start using technology, machines, robots, things like that, and ultimately become competitive? But as we do that, how can we do it ethically, without putting people out on the street?
Yeah, I mean, first of all, just on your first point, in case people don't necessarily understand that, but yes, the goal of economics or the goal of growth is to eliminate work, eliminate the need to work. I mean, obviously, in a primitive economy, all the cavemen worked, right? They had to work all day long just to survive. And as we invent tools, tools are labor-saving devices. And the more labor-saving devices we have, the less we have to labor ourselves. And the ultimate idea is to become so productive, to create so many tools and machines and robots that we could just relax and enjoy ourselves and let the machines do the work for us. I mean, that's ultimately the goal. But, the way that America is going to have to regain its competitiveness, unfortunately, is going to be initially through lower wages. The reason that Americans were able to enjoy rising wages in the past was because of all the capital investments that we were able to make. American workers had more capital than workers in other countries. Now, why did they have more capital? Where did they get it? They got it because American entrepreneurs had access to savings. How come we had so much savings? Because we had sound money, we had low taxes, we had low regulation, so people had incentives to save, and other people had incentives to borrow those savings and make investments because they could reap the rewards if they succeeded. So we had a vibrant free market economy that effectively utilized our savings, and we grow. And our workers had the benefit of capital. I mean, the reason that somebody digging a ditch can earn more money when he's digging with a shovel than with a teaspoon is because of the shovel. And the reason somebody can earn more money operating a bulldozer is because he's got the bulldozer. It's the capital. It's the same labor, but it's the capital that the worker has that gives him the productivity. Now, sometimes, of course, it's also know-how. People have to be educated and people have to learn how to operate the machines. But the important thing is the machine itself. Now, unfortunately, since we've squandered so much of our capital, we're going to have to move, start from a lower spot. So Americans are going to have to surrender a lot of the wage gains that we had initially earned based on our weakened capital position. But the way I really hope that we can regain our competitiveness is to slash government spending and slash government regulation and unleash the free market economy. And if we could be the low-tax, low-regulation economy again, if we can reclaim a comparative advantage in economic freedom, in freedom from government, then it's going to be a lot easier to dig our way out of this hole. And our wage drops will not be permanent. We'll be able to gradually raise our wages and raise our standard of living and reclaim a role of economic leadership. But none of that is going to be possible until we dismantle this gigantic government and go back to a sound money, because if we stay on our path right now, we're going to have much lower wages because inflation is going to destroy the value of our wages, and many, many Americans are going to be unemployed because there is going to be no dynamic market economy. There are going to be no jobs of the future to replace all the jobs that we're losing. The government is going to make sure that doesn't happen.
Okay, and on the point of government control, leads me to my second question about central banking in China. Aren't they essentially doing the same things that we do? I mean, they have a fiat currency, they have a central bank, they have stimulus packages. So why are you and Jim Rogers so bullish on China when ultimately they pretty much do the same stuff?
Well, no, there is a big difference. The Chinese are making stuff. The Chinese are working hard in producing. So even though the Chinese government is creating inflation, they're doing it against the backdrop of economic vitality, of strong productivity. The typical Chinese worker is saving half of his income. So they have a savings-based society. And if you look at Chinese regulations, if a businessman, if somebody, an entrepreneur, wants to go into business in China, it's a lot easier than an American trying to go into business. There are fewer forms to fill out, fewer regulations that need to be complied with, fewer taxes that need to be paid, and it's a freer labor market, so it's a better place to do business. But yeah, they're not doing everything perfect, far from it. But one of the main reasons that they're pursuing such an inflationary monetary policy is because they mistakenly believe they have to prop up the U.S. dollar. It's because the dollar is the reserve currency, and the Chinese think they have no choice but to print up all this money to prevent the U.S. dollar from collapsing. But they're wrong, and they're going to wake up to the truth. And we better prepare for that day because it's coming.
Does the system really matter of government as long as you have enough increases in productivity? Does it really matter what type of system you have?
Well, yeah, because if you have a real communist system, you'll have no productivity. I mean, look at the Soviet Union when they were really communist. Or look at China when communists actually ran China. I mean, you need a capitalist system. You don't need to be a democracy. All right, that's not the key. The key is private property, competition, free markets, incentives. That's what you need. Whether you get there through a democracy or through a monarchy, it doesn't really matter. But as long as you have free markets and people can keep what they earn and governments stay out of the economy, you're going to have economic growth. Anyway, that's it for today. Thanks, everybody. We're running out of time. Again, 800-727-7922. Don't forget, excuse me, SchiffForSenate.com is the website for my exploratory committee. Tell your friends. And make sure, if you haven't read Crash Proof, How to Profit from the Coming Economic Collapse, and the little book of Bull Moves and Bear Markets. This has been Peter Schiff, Wall Street Unspun. I'll be back again next Wednesday, 8 p.m. Eastern Time, 5 p.m. Pacific, www.europac.net. So long, everybody.